Well, yes, good afternoon, everyone. As outlined, we're here to talk about the future of VC in crypto. I'm very pleased to be joined by four expert panelists, one of which is, as we speak, getting mic'd up, but no, he is heading our way. So, notwithstanding my stalling tactic, which I'm sure you've all seen through, I'd like to welcome the four speakers to join me on stage. Right, welcome the four of you. Yes, so we're here to talk about, are we still bullish, the future of VC in crypto? By way of introductions, I think starting from Chris on the end, each of you introduce yourself, tell us a little bit about your involvement in cryptocurrency venture capital, and well, answer the question, are we still bullish and why?
Yeah, my name is Chris Delgado. I'm the CEO of Goliath Ventures. We're a private tech fund. We're based out of the US in Dubai. In the aspect of bullish in crypto, obviously we're bullish, that's why we're here. But I think it's the aspects of crypto and Web3 of what we're bullish in. I think the meme coin era died in the last cycle, and we're more looking for infrastructure this next bull run.
Thanks, Chris. Katie.
Hey everyone, really nice to meet you. I'm Katie. I'm from Outlier Ventures. Been in the space for a few years now. My background originally is in art, but came into the investment space 3 years ago and been with Outlier ever since. Now, Outlier Ventures, we're an accelerator, so we perform a slightly different role within the VC ecosystem. And given that we are more about supporting founders with what we call human capital, I would say that we are always bullish, no matter what the cycle of the market is, because we're always supporting founders, and we know that no matter what the market's doing, even if it's a bear market, it can actually be the best time to build. So we are always bullish.
Take it away, Ben.
Excellent. Good afternoon, everyone. Mohamed Ezeldin, Head of Tokenomics at Animoca Brands. Really, when you're thinking about Animoca Brands, probably the best way to think about us is as an ecosystem builder. We have a VC arm, which invests. We also have different advisory arms, over which I oversee the tokenomics side of things. Are we still bullish on crypto? I mean, look around. I think we definitely are. I think I think Chris said memes are dead. I think we're seeing a meme super cycle happening right now. And that memes bring in culture, but I also feel the role of VCs in crypto is evolving, and that's something I'm looking forward to speaking about later on.
Thanks, Mo. And last but not least, Richard.
Hi, everybody. Great panel. Very happy to be here. My background was building a couple of different software companies. One in the kind of the beginning of actually kind of the internet, and then the web, and another one in what we now call kind of Web 2, sort of piece of the cloud. And so the perspective that I had, and we had at Fabric when we were kind of getting going, was not really, should we say, about crypto per se. It was about a new compute stack. Accelerated specialized computing, the ability to own your identity and your data and your social capital, and then all of that allowing you to organize the world's information to feed to algorithms. So for us, we've been bullish for a decade. Like everybody on the panel, I guess we remain maybe even mega bullish, we think. And we'll get into the details there. I'll kind of unpack it. I do think, though, that we should be sober. I was talking to someone, well, maybe not the weekends, but generally sober about our perspective on these things. I was speaking to someone who, actually Tom Blomfield, who's a group partner at YC yesterday, and it's only like 1% of their investments are in kind of crypto or Web3. And if you talk to investors, limited partners outside of the space, who talk to people out of the space, a lot of people are going, is there anything still going on? And so I think when we're in our little echo chamber, we can pat each other on the back and go, I'm bullish, this is fantastic. But we are, it's literally, we're right way before the foothills of the transformation we're hoping to make happen.
That's an interesting point, Richard. So I'll stay with you for my opening question, come to each of the other panelists in turn. We're talking about VC and crypto, but obviously I think that's at the nucleus, but all the other things that can cross over into. I think this is this particular conference is a great example because it's more broad Web3 in its focus. What are the particular areas that you are seeing as hot trends in maybe in the context of this sort of broader bull market? Because one that I'll offer it as an example, you can run with it if you like, but in the last 18 months, the crossover of AI and blockchain suddenly caught fire. What have you been seeing?
Yeah, so a lot of threads, no pun intended, all coming together, including those ones. One way that we sort of think about it, and the kind of magic power of 3, is that there's still a huge amount being done on building a kind of truly scalable, and indeed modular, open and interoperable, should we call it, blockchain stack, something that is kind of consumer grade, and also kind of like sort of world-class developer grade. That it shouldn't be for the hobbyists or the kind of nutty enthusiasts to wrestle with wallets and choose which layer 2. This is obviously crazy from a consumer perspective. That's come a huge way. I think it's really at a tipping point, but people are still fixing elements of that. Things like full chain abstraction, so you don't actually care where your tokens, which chain they're on and which liquidity pool they happen to be in. It all that gets addressed for you automatically. Another exciting area is the concept of sort of intents. Lots of puns about it. It's intents, but INTENTS, which really is just how to elevate the function of these decentralized apps to one where you can express your objective as a user, and it can work out how to get you to that objective. And so that's on the kind of stack. Then I think that crosses over into the second area we think about, which is, just call it kind of the reimagination of money that Satoshi kind of kicked off in the beginning. And obviously that's come a long way with DeFi Summer and the lending protocols and decentralized exchanges and a lot of stuff that is phenomenally scalable and effective now. We're seeing a whole thesis around what internally we sometimes call the stable sandwich or the stable genius sort of thesis. That is to say, the use of stable coins to settle all sorts of different transactions, and indeed to provide possibly the payments framework for things like agents, which brings us to the third bucket, which is AI. And so if we think that the kind of reinvention of money for the world is big, it sounds pretty big, trillions of value, obviously, many trillions, tens of trillions. We think of this third bucket and that intersection with AI, the ability to organize the world's data at the right place, right time, right format to feed into algorithms is what's going to make both helpful and safe. Sort of, let's take, for example, Elon's vision that he was rolling out of the Optimus robots, and so AI embedded in robots, but also AI doing our bidding back in kind of DeFi, for example, sort of hitting a certain risk-return profile. So those are the three buckets: super scalability, really DeFi and internet sovereign money becoming prime time, and then AI. For us, they all kind of interplay in a very powerful way. And I don't know whether I've communicated it, but there are a lot of challenges in making what I just described sort of glibly in a few words work. And that's the opportunity for founders, is to go and solve those challenges.
Congratulations. I asked you a question about crypto VC, and within 5 minutes you got into robots. So,
let's try and spice it up a little bit.
Yes, and with that spice, Chris, I'll throw it over to you for your particular perspective on this, on the specific trends that you've sort of noticed, that you're noticing emerge or you expect to emerge in crypto VC in the next, let's say the duration of this cycle into the next one.
Yeah, I think the biggest difference in this cycle is we're seeing projects with actual utility and infrastructure. I think the last bull market, you saw a lot of ideas outflow into the marketplace, a lot of capital outflow into those ideas, and a lot of those companies aren't around today. So for us in our firm, as we deploy capital into different projects, we're seeing who the leadership team is, the structure, and the actual, is there validity in the market? Is there utility in the market for this? Everyone has a great idea, and we're sometimes the bad guys that say, like, your idea is great, but the market doesn't demand that. We said it earlier in the earlier speech, as far as not everything needs to be on blockchain, not everything needs to be tokenized. There can be actual utility outside of that, and we'll still allocate funds for that.
Just picking that point up, Mo, on the subject of utility, I was at a conference, I think it was September 22, so early bear market, we'll call it, and it was a panel with your founder, Yatsui, and Sebastian Borget, who's the founder of Sandbox. And this is at a point of, I was picking up from the point of view that I joined CoinDesk in February 2021. So I sort of was head first into the proliferation of NFTs. I remember I'd been on the news desk for maybe a couple of weeks and the Beeple story came about. And I sort of asked those chaps from that perspective, if we think of NFTs as the standard bearer of that particular cycle, could they make a case for the equivalent in the next cycle being something like gaming, which is a big part of Animoca's expertise. So with that in mind, can you give us your perspective on the uses of blockchain Web3 that are offering utility that you're seeing?
Absolutely. I think it's super interesting because what we've seen maybe up until a year ago is onboarding people because of the solutions that blockchain actually give us. That you can own your data, you can own your digital assets, interoperability. But we've sort of hit a saturation point of people coming in for the sake of decentralization, the sake of ownership. And we talk about mass adoption, and mass adoption isn't going to come because of the tech. Mass adoption is going to come because of the application layer, fundamentally. And that's where gaming is important. That's why there's so many other verticals, music, entertainment, even DeFi becomes super important as well, because that's how we onboard new users into the ecosystem. Quick show of hands, how many people have WhatsApp? Quick show of hands, how many of us have WhatsApp? Do we have WhatsApp because of the operating system or because it's built with maybe JavaScript or whatnot? No, we have WhatsApp because of the network effects that surround WhatsApp. And sort of an example that I like to give around network effects as well is a few years back when Meta brought out WhatsApp, how many of us downloaded Signal or Telegram because we wanted our data to be safe? How many of us still use WhatsApp today? And that's exactly my point. We can come in for the belief in what the technology allows, but if you want mass adoption to come in, what we need is that application layer. And that's why gaming is important. That's why, again, music, entertainment. And we're starting to see a lot more of the bigger companies and a lot more of the private banks that were saying, Jamie Dimon, crypto's a scam. They have crypto trading desks now. We've come such a long way in the past 4 or 5 years. We have the ETFs of past. So the understanding of crypto is changing. You mentioned NFTs, and sort of my thesis back in 21 was that gaming NFTs were going to take off for the reasons that I've just been explaining. But what we saw was actually PFPs that took off. And what PFPs allowed is for people to access culture in a way that...
Just clarify, sorry.
Yeah.
PFP stands for?
Your profile picture, fundamentally. So you saw Bored Apes, you saw Cool Cats, you saw CryptoKitties and other prominent blue chip NFTs come out, and it was because I can associate with someone else and build that reputation and rapport purely based on the fact that we held a PFP from the same ecosystem, from the same collection. And we saw the rise of Bored Apes. We saw the rise of other blue chip collections as well. So it was maybe, we had to take it a step slower. And I feel now, again, EVE Online, one of the biggest MMORPGs that have a live, probably the best token economy that hasn't been tokenized, if you like, for the last 20 years. They're releasing a Web3 game. They have hundreds of thousands of monthly active users or monthly active players. So that's a very strong value proposition when we think about mass adoption. Telegram and Ton is another one. Telegram has 950 million users. They have an embedded wallet in the back end. Imagine onboarding 950 million users into an ecosystem where the majority don't know that it's actually blockchain, that it's crypto. And I feel it's consumer crypto, if you like, which is something ApeChain is going for within the ApeCoin ecosystem, something even Pudgy Penguins and Lucanets are going for with their abstract chain. We're seeing a lot more coming to fruition now because the tech has enabled us to do that. Interoperability isn't just a buzzword we were using years ago. It's something that we're a lot closer to seeing become a reality.
That's an interesting point. I always think the the measuring stick for adoption of crypto Web3, as in we don't even talk about it being Web3.
Yeah.
Nobody was, when people started using social media in the mid-2000s, nobody was saying, oh, it's Web2, it's amazing. They were just saying, no, I've got a Facebook profile, I've got a YouTube account, and so on. Katie, picking up from there, in terms of the things that you would be getting excited about in terms of from a VC point of view, but adding your the accelerator perspective onto it, if you could, please.
Yeah, absolutely. So in terms of like where Outlier have been focusing, now I mentioned we're an accelerator. What that really means is we tend to work with founders who are at a slightly earlier stage than some of the other VCs in the space, and they usually come to us at a stage where we can be a kind of co-pilot with them and support them through their journey to prepare them for later stage investment, which means we have a really good relationship with the likes of Fabric and some of the other VCs that we have with us today. And actually this year, what we have focused on is building 3 theses around 3 key areas that we believe are solid in the market at the moment, and that we see that the later stage VCs are also focusing on. So one of them was, of course, crypto and AI, or the intersection of crypto and AI. So that's a nice synergy that Richard has spoken about as well. The second one was RWA, or what we call real-world assets. So the tokenization of any real assets that we look at in the real world, things like tangible assets like art and real estate versus financial assets, and also even intangible assets like data and IP. And then the third bucket that we focused on was actually deepen, so decentralized physical infrastructure. We released 3 theses around this area, and we actually ran 3 really successful accelerators in Q2 of this year, and they wrapped up in August. And they kind of supported each of them 6 or 7 startups that progressed their journeys in those areas. I actually lead our RWA program, so I can also speak a little bit about that with, from a tangible perspective. I think maybe just to take an example, one of the teams we supported, Credible, they are essentially an on-chain private credit fund. They joined us at a stage when they really needed support with their token design, tokenomics, to ensure that they were really positioning themselves for onwards investment. And at the end of the program, they've closed a 5.2 million round led by Gnosis VC. So they kind of come in and we support them at that stage, and then they fit in with the later stage trends with VCs at the time. In terms of upcoming programs, we're actually now focusing on a couple of regions, one of them being LATAM, so geographical regions. We're really excited about some of these growth markets that are coming up in the Middle East and Latin America. We've just kicked off our LATAM program in partnership with Morgan Creek, who are providing some capital expenditure together to invest in the teams, and we are then bringing our expertise to support them during the program. And of course, another RWA program is coming up as well, because we see this as a really strong investment area at the moment, with a lot of really, really solid, strong founders coming up in the space.
Thanks, Katie. I really should have given a bit more of an introduction myself and what I'm doing here, which I'll sort of fit in now. Among my numerous hats I wear at CoinDesk, one of which is doing the majority of our VC coverage. Another is Bitcoin-specific focused technology and protocols to do with things like ordinals and runes and BitVM, and basically bringing that utility that is commonplace on Ethereum, etc., to the world's original blockchain network. And I enjoy writing about VC because a lot of the time it's very easy to get to the heart of the story. It's kind of, what's the project, what does it do, how much have they raised, where did the money come from, and what are they going to do with it. Chris, what are the other aspects that, if without asking you to do my job for me, what are the things that you think are at the heart of a project that's raised some money or some VC has been put into a fund. What are the fundamentals that followers of this space would want to know about?
Yeah, I think the biggest thing for us, it's the leadership team. It's the people behind the project. Do they have actual real-world experience, or did they just make a bunch of money off Dogecoin and now they want to start a company? The other thing too that we look at is one thing that's the biggest turnoff for us is when people say, oh, this is my passion. We don't like that because passion doesn't make money. Elon Musk's passion wasn't PayPal. It's building rockets and landing on Mars. But he had to build a vehicle to provide him cash flow to get to that point where now he can pursue a passion. And even that, SpaceX is run off government money. So it's not even making money. So for us, we look at the leadership and does it fit in our ecosystem? We are a capitalist company. We want to make sure that everything in our wheel is making money, is cash flowing, or has potential to cash flow. And so when people approach us and they want us to invest in their companies, we need to say, does the market demand it? Is there application? That was a great analogy, by the way, that you used. Is there actual world application to this project? And if they say, oh, this is my passion project, then for us, it's like, okay, well, good luck. We'll see you down the road.
Yeah. Richard, have you crushed anyone's dreams of late with something that you're not interested in their passion?
I'm really bad at that, actually. As in, I tend to still have quite a lot of my kind of sort of builder sort of background in kind of my conversations with founders. I'm always sort of tend to be thinking about the things that can be and help, and sometimes maybe even too much. Think, wow, you could create this from the direction you're going. So I have to have other team members who can try and keep my feet on the ground sometimes. But I would certainly agree that, and because you do have to ultimately say, look, I don't think this is a fit. I would totally agree that obviously that, you know, and it is a, you know, conventional wisdom that the team is critical. The team can pivot the product. The team can actually change the market and develop a different customer base. So it ultimately comes back to that, especially at the seed stage, which is where we're looking to invest. I think if we're digging into the question of like, what are the characteristics of the team that make them kind of brilliant, there's kind of things like, and maybe that's where the kind of passion question comes up, is like, if you have to tell somebody that this is your passion, then you're too much on the kind of, I'm telling you versus showing you sort of side of the spectrum.
It's got a bit of the X Factor audition.
It has a bit of that, exactly, you know, and so that's not right. And then other balances, like, you know, you want people who somehow are quite humble and want listening to everything, but they're very, very clear on their own opinions at the same time. So there's a kind of that balance. And folks, indeed, who can kind of dream incredibly big, but work out how to break it down, you know, into the kind of, you know, mouthful-sized, you know, pieces of elephant they're going to chew off. So,
yeah.
And so, I mean, just if we dig into those are some of the characteristics you tend to look at and just get a feel for, and then you kind of take it from there. And the rest of it is a derivative of those teams.
I'd like to talk a little bit about also if we're talking about crypto VC, aspects of it which are very crypto specific. Because, you know, we're supposed we're in danger if we talk about VC at a broad level, but, you know, what is it about specifically crypto that sets it apart? So Mel, I'll come to you on this because to get the tokenomics perspective, tell us about that.
Where do you want me to start?
Well, we've got exactly 10 minutes.
Cool. I'll keep it short.
And I'd rather
When token.
When token. So I think probably a good place to start is always looking at where the market is at. And over the last maybe 2 to 4 months, we've seen a rejection of a number of VC coins, especially those listing on exchanges. And one of the reasons for that is naturally a VC is there to make money. And given where they invest at and where the listing happens, that there's an ROI there. But there is no more dumb money per se left in the space. So everyone who's in the retail area is thinking, well, we have an idea of where VCs have invested at it's listing at a few X's to where VCs have listed, to where VCs have invested, sorry. So we're going to wait for this token to dump. But in doing so, it creates a very negative flywheel, in my opinion, where projects need attention to list. So they promise an airdrop. They do these different campaigns. They want to list at a high valuation to showcase there's value in this ecosystem. The airdrop will happen. A lot of the participants will end up dumping because they're not in it for the belief in that ecosystem. They're more in it to make a quick buck. And what you see is this flywheel ends up with the token price down 90% from listing, and the aesthetics from a price action, from a chart perspective, and really think of the chart as the UX for the retail user. A chart that looks like that is not a sexy chart, is not something you will look at and think, I want to invest in this. So I do think there is maybe some fixing we can do in the space where, yes, the aim for a VC is to make money, but the aim is for that money to be made in an equitable manner. So, like Chris touched on capitalism, and it's a form of stakeholder capitalism where anyone who owns some of these digital assets has a role to play in the growth of that ecosystem. And it then comes down to what's the short-term gain versus the long-term gain, and where's the payoff between both. Just out of interest, how many founders do we have in the space today? Quick show of hands. Okay, so maybe about 10 to 15% of the audience. VC money is important because you do need to be able to raise money to actually start building out a product. But you have to be careful in terms of how many tokens you're giving away. What we're seeing maybe the past 12 to 18 months from an investment structure is a lot more an equity raise with a token warrant. So you're giving the VCs the safety on the equity side and some upside in the token, but also in doing so, you're not selling a large amount of your tokens. Really, when you're thinking about your tokens, be them fungible tokens or non-fungible tokens, they're a product within themselves, and they're a vehicle that anyone who has ownership of this to be able to have a say within that ecosystem, hence stakeholder capitalism. So when designing for things like this, it's understanding what is the utility, but also what's the importance of the speculation layer. As of today, the majority, because of the incentive structures that are in crypto, the majority of the user base isn't there for utility, isn't necessarily there for governance, they're there for ROI. So if you're planning something that's purely a utility play, unless there's that FOMO or hype narrative around it, we don't tend to see tokens do well. And it's the price action around the token outside of Bitcoin and Ethereum maybe, because they do have genuine utility just through being a gas token. It's tokenized attention. So a token that has a lot of attention tends to have better price action. And we can see that with Solana. Like, what's Solana great for when we think about it? It's great for memes. It's a great meme ecosystem, but I think Solana's what, 4th, 5th market cap out there today? Probably top 3 if you remove USDT as well. So I've probably gone on a long tangent from what the original question that...
Can I build on that?
Yeah,
or,
by all means.
I mean, so first of all, Fabric, we're massive believers in the potential for tokens and token economics. We think, the superpower of Web3 is this ability to incentivize coordination of people to do, really tough things on a continuous basis and at scale. But what we're trying to build there is kind of nothing less than a kind of reinvention of the capitalist system, some kind of stakeholder capitalism or modern mutualism or collective, or whatever you want to call it. That's pretty big, and we're reinventing kind of like the way public markets work, and we've got more participants to kind of get involved and serve their interests. So for me, it's not surprising that obviously in these experiments things get overheated and we haven't quite got it right. Added to which, I think we need to kind of face the reality that you use the what I can only guess is a euphemism. ROI. It's really kind of like if you're interested in ROI, you're interested in a quick buck. I think is what you're saying. Yeah. World casino rather than world computer. There's still a lot of what is happening is still a huge amount of speculation, on the promise that some of these projects are going to continue to find out how to deliver fundamental value. But the good news is that I think we are getting to that point, the marriage of consumers who will pay for stuff because they can actually, use this, it's easy to use it now, with, the ability to deliver outcomes and using AI even. You've now got real utility built into these dApps, and I think we're going to start to see that being rolled out, and people actually injecting value, whether it be fiat or tokens, through these apps. And then that being reflected back in the token economics, and we'll see kind of something happen then. Hopefully in this next bull run, but if not that, then the one after.
Yeah, Katie, I think you would have come in here as well. That's, but also, and adding on to that, what was going to be my next question address to yourself is how you tie that into, again, the broader role of an accelerator and incubator. In general, sort of the other forms of support that a firm may need, an early stage project may need to make them, as it were, VC ready.
Yeah, absolutely. So I'll build on these points and then I'll go into that. I think we spoke about the crypto kind of landscape and the nuances of VCs in this space. And I think just echoing some of the points that Mo and Richard have made, I think the crypto space is very complex as an early stage startup in particular. And that's why actually something like an accelerator or some form of support is actually needed at an early stage. I found it interesting recently actually that in one of the Masari update emails the other week, one of the headlines was accelerators take center stage. And it was highlighted that actually 36% of investments made in September were by accelerators in the Web3 space. And I think it really highlighted kind of even the later stage startups were also even seeking support from some of these accelerator propositions as well. So even if they were a little bit more advanced, having a bit more traction, they still very much needed that early stage support. Now, what do I mean by that support? And I think that's kind of what you were really asking there, Jamie. What we mean is, so I'll give an example of how Outlier really supports founders. Now, we run these 12-week programs, and actually the main value that we add is not monetary. It's that we have in-house experts in various different fields of Web3. So that ranges from token design and tokenomics. That's one of our USPs. We've been investing in the space since 2014 and launched a number of the most successful tokens. So we've done this a lot before, and there are many pitfalls that founders can come into. And we're here to kind of share our experience and make sure that the founders understand where they need to be aware of those pitfalls and also ensure that their token design is rock solid if they're going into TGE. A second point is area of expertise is particularly around product and tech. So we have very deep engineering experience with some in-house specialists, specifically in the Web3 space, who are used to dealing with building Web3 products in particular. They are available to the startups during our accelerator programs to really give that support as well. We also have marketing and community specialists, and then we also look at the legal aspects as well, advising the startups where they need to be aware of looking at certain jurisdictions or introducing them to lawyers in the right areas that they may need support. So I think that's just kind of a broad overview, and I think just to highlight, that role is really critical in the crypto space just because of things like regulation, things like the nature of it being such a emerging tech and so many complex systems in terms of business models and strategy that they need to kind of tackle. And in addition to that, I would just say that as an early stage founder, you don't always have a lot of money to spend on services like that, and an accelerator can be kind of an all-encompassing support system for you, not only from that technical and regulatory perspective, but also from just a support perspective as well, because it's early, it's hard being an early stage founder, and we also offer a lot of that emotional support. Let's say we're here to kind of help make decisions, tackle some of those difficult questions that are really demanded of you at that stage. So a little bit of an overview. Hopefully that gives some perspective.
Thank you, Katie. And that takes us, to the end of our panel. So thank you all ever so much for your attention, and please join me in giving the four panelists here a very warm reception.